Ethereum generates a yield. So if you're holding it and you're staking it, you're getting paid for it. And that's what he's referring to. And you can reinvest it into more Ethereum, or you can treat it as net income, or both, because it is recognized as income from a GAAP. As long as it's properly done from a GAAP perspective, it's considered revenue and net income.
In a world where financial innovation is reshaping the very definition of money, Tom Lee, a seasoned Wall Street strategist and crypto advocate, presents a compelling thesis. Ethereum and Bitcoin are no longer just digital assets. They are the cornerstones of a new financial paradigm. Ethereum, with its yield-generating staking model, is rapidly becoming the financial infrastructure for a tokenized economy, while Bitcoin remains a robust store of value akin to digital gold. Lee highlights that institutional adoption, regulatory clarity, and technological advancements have now converged to turn crypto from a fringe concept into a macroeconomic force. With traditional finance firms like JP Morgan and Goldman Sachs racing into the space, and Ethereum powering tokenized assets and stablecoins, the next decade could belong to blockchain. For investors who understand the blue-chip philosophy, buying dominant platforms, Ethereum and Bitcoin aren't just good buys. They are foundational pillars of the digital economy's future.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Bitcoin and Ethereum should be friends, because I think the community tends to be really fractured. There's ETH maxis or Bitcoin maxis, but Bitcoin really is proven itself to be digital gold. A real store of value and a good way to move and actually move quite a lot of money pretty simply and move a lot of value. But Ethereum, as you said, is programmable. It is really robust. The uptime is better than any other layer 1 blockchain, especially with smart contracts. And so that's where Wall Street is coming in and saying, you know what, I want to tokenize a dollar, that's the stable coin. I want to tokenize real estate. I want to tokenize equities. Most of that is taking place on Ethereum. JP Morgan's choosing it, Robinhood. And that has led to the price recovering from 1,700 to 3,800. It's still below the 6,000 from 5 years ago. And if you inflation adjust it, it's like 9,000. So Ethereum is still super cheap.
So good buy then.
Yeah, it's a good buy. What's an asset? What's a commodity? These are not clear definitions, but I think probably the simplest thing that your viewer has to think about is geography. Ethereum is the same blockchain in any country, but we're treating it with different rules and with a different quotation. Stablecoins are helping change that, but it's very complex. So
I think it's a huge issue.
Yeah, so I think that regulators don't have an easy job. And if I can help, I will. And if I could help with policy, I'd be glad to. We're going to be we are the largest holder of Ethereum today, more than the Ethereum Foundation. Because we have over $2 billion of Ethereum. So we want to make sure everything works. I think many banks are going to come out ahead. I think JP Morgan and Goldman are winners.
By sheer size or the work they put in?
They're smart. JP Morgan's a super smart company, and same thing Goldman. Any company that is good at trading is going to get crypto right. We've been recommending Bitcoin and Ethereum for about 8 years. And most of that 8-year journey, when Bitcoin was under 1,000, was that crypto was not considered legal or legitimate. And it fought a constant uphill battle to get regulatory recognition. But in the past year, that has completely transformed. And now crypto is not only being embraced by the government, but the banks are really running into crypto now. And they're embracing it because they're making money off the ETFs, but also because the stablecoin business has become the ChatGPT moment for crypto. It's been widely adopted by consumers and merchants, and now banks want to offer stablecoins. And most of that's taking place on Ethereum. So Ethereum, from talking to my institutional clients, has become the biggest macro trade for the next 10 years.
Tom Lee argues that Ethereum is not only undervalued, but represents the biggest macro trade of the next decade. Its programmable nature and superior uptime have made it the preferred platform for tokenizing real-world assets. from real estate to equities to stablecoins. Institutions like JP Morgan and Robinhood are already using Ethereum to build the future of finance. Critically, Ethereum offers a yield through staking, creating a dual function as both a utility platform and an income-generating asset. This yield is recognized under GAAP accounting, allowing firms to treat staking income as net revenue. Ethereum's adoption is catalyzing a structural shift where banks are embracing blockchain, launching ETFs, and offering stablecoin services, most of which are Ethereum-based. With its price still far below its inflation-adjusted all-time highs, Ethereum is trading at a discount to its intrinsic value. According to Lee, it's not just an asset, it's the infrastructure for the next generation of global finance.
Ethereum generates a yield. So if you're holding it and you're staking it, you're getting paid for it. And that's what he's referring to. And you can reinvest it into more Ethereum, or you can treat it as net income, or both, because it is recognized as income from a GAAP. As long as it's properly done from a GAAP perspective, it's considered revenue and net income. As long as people are backing their reserves, there's no risk. And I think that's what the model is.
That's the key factor of the risk factor.
Yeah, example is, you probably don't realize, have you been to Bermuda?
Yeah.
Okay, and you use Bermudian dollars, right?
Mm-hmm.
That's a stable coin, because the central bank does not guarantee that rate.
Really?
There is nothing backing a Bermudian dollar, but it's still equal to $1.
So we are already kind of living it.
So Circle is more secure than a Bermudian dollar. Stablecoins are a hugely profitable business because Circle is showing it, because they don't pay interest and they're earning 4% on their reserves. Coinbase is a very profitable company. It's done very well. But the Ethereum treasury companies are very profitable. When we do native staking, we're going to earn more than 4% native staking yield. So on the current Ethereum held, and we haven't disclosed what it is as of now, this minute. We've disclosed what we had yesterday. It's about a $100 million net income business.
Yeah.
So,
and that's net income.
Yeah, it's
real net income.
It's dividendable net income, There's a lot of innovation that comes with crypto. I think that you have to think about crypto as it's Wall Street going onto the blockchain, but then it's AI making the digital world more acceptable. So crypto is the intersection of Wall Street and AI. So it's a really important place to be for the next 10 years. An investor who's going to buy anything in crypto and in equity has to say what's worked in the stock market. And it's always been buying the winner take most blue chip company, right? That's why we have the Mag 7. So and as you said, Dan calls it Crypto 7. But I think that there's really good blockchains, but the ones that are dominant are Bitcoin, Ethereum, and maybe Solana. And in terms of crypto equities, MicroStrategy is the bluest at blue chip. There's Coinbase and Circle. In the Ethereum treasury world, the institutions are going to buy an Ethereum treasury stock over Ethereum because they can just make a directional trade in Ethereum, but they'd rather own a crypto treasury the way MicroStrategy was a 35x for them. So I think they'll pick the one with the largest market cap, the most liquid. Currently, it's BitMine with $4.5 billion in market cap.
As Tom Lee emphasizes, Bitcoin and Ethereum should be allies, not rivals. Bitcoin, with its unparalleled security and scarcity, is the ultimate store of value, while Ethereum is the backbone of decentralized finance and digital commerce. Together, they define the core of the crypto blue chip class, what Lee calls the Crypto 7. With AI and blockchain converging, crypto stands at the intersection of Wall Street innovation and digital transformation. The stablecoin market, Ethereum treasury firms, and native staking economies are becoming billion-dollar profit engines, and investors are beginning to treat Ethereum-based companies like traditional equity giants. The playbook is clear. Just as the stock market rewards dominant, winner takes most companies like Apple and Microsoft, crypto investors should focus on the platforms with the most users, best technology, and broadest institutional backing. Bitcoin and Ethereum meet all those criteria, and according to Lee, they're poised to outperform in a world racing toward tokenization and decentralization.